Good afternoon, folks, or good evening, rather. This is Andy Pedraza with Special Effects Academy. I do apologize for the late start today. We're on the start of the week session for the Forex Trading Room on November 24th of 2019. As usual, we'll be following our standard agenda. I'll look at the prior week's results, our currency strength meter for the past week and the past month. A look at the calendar of events scheduled for this week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. As usual, we'll start out with our ledgers, our long-term ledger on screen. Not any significant change. We're talking tenths of a percent change, and mainly due to, or actually entirely due to swap. So that's the only thing that's changed on the account since last week. We have the same two trades open, a short on the pound JPY, a short on the pound CAD. Pound JPY is at profit, pound CAD carrying a very slight loss. On the intermediate, we did close out a few trades and open some new ones, but in essence, the same thing. Sorry, it's been pretty sideways. We're off our growth from last week by a few tenths of a percent. So even though some trades closed, the net change was none. And we did open 3 new trades this week on the USD CAD, Aussie dollar, and Euro Swiss. Euro Swiss being a re-entry of a prior trade that we did close out at profit. And on the short term, we did have a drawdown a little bit under 3% on just 2 trades. So a very light week trading on the short term, but both trades did go against us. And again, this is pretty indicative of sideways markets. They're not going to give you too many opportunities to get something, and especially on the short term trading is pretty much not suited for sideways markets. But you still have to trade because you never know when the market is actually going to change and start giving you the profits. So consider it the cost of doing trading that we will be having drawdowns every now and then. Notes and opportunities for improvement. We're still in an essentially flat or sideways market, as I just pointed out. This week that begins today is the U.S. Thanksgiving holiday, so we do expect trading to be light, or volume in trading to be light for the week, and it will be an abbreviated week. We will be suspending live trading after Wednesday's evening session. So Thursday and Friday, we are going to be off, and wishing everybody a happy Thanksgiving if you're in the Americas, or, you know, a happy week if you're anywhere else. And we are looking forward to the trading opportunities that are going to be coming in December. And that's mainly going to be coming from the UK's election, still scheduled for December 12th. Let's take a look at our relative strength meter for the past week and past 30 days. On the past 30 days, we can see that the clear losers and the bulk of the movement to the tune of 6.5% have been from the metals, and specifically silver has been the big loser in the last month, with gold following not far behind, but not at such a deep level. So we can see that the bright red coloring is exclusive to the silver column. Everything else had movements that were much smaller, with probably the biggest mover down in the last month on the currency side being the Canadian dollar. It's the only one where you can see the red color, or rather very light pinkish on the on its column. On the weekly, we had a very low volatility week. Again, it's a sideways market, so we had less than a 1% net movement, and most of it was, well, you know, it was across the board. It was still sideways. We had a few currencies drop and a few currencies go up, but in general, a sideways market. The clear losers for the week would have been the Canadian and the Swiss, and the clear winners would have been the yen and to some degree the Kiwi dollar. I wouldn't say that the US dollar was far behind. It did end up for the week, except against the yen and the Kiwi. But in general, as I said, even with those that moved in one direction or another, it was limited to less than a 1% change in relative values. So the very dictionary definition of sideways. Our calendar for this week is about as light as you would expect, it being a holiday week in the US. There's not a whole lot of things scheduled. And this is the first time in quite a while that there will be no live trading. There's nothing on the calendar that warrants giving it special attention. So we have a speech coming out from the Reserve Bank of Australia very early in the morning on Tuesday, 4:05 a.m. Not going to be trading that. It's just not worth it. And Wednesday, we have a little bit of activity on inflation reports out of the UK and GDP, as well as durable goods orders coming out of the US. Again, nothing that I would be too keen to trade. I wouldn't expect any significant movements, much less on the eve right before Thanksgiving. And on Friday, we do have the GDP month over month coming out of Canada, but again, something that I would not be interested in trading live. So as I mentioned before, we're going to have a regular schedule today through Wednesday. So we will end the week on Wednesday at 8 p.m. At some point, I will do an end of the week session, maybe not at the scheduled time, but at some point before Saturday, I will do a summary, a closing of the week. Probably not going to be live. I'll just record it and send it out by email. But the conclusion from this slide is there will be no fundamental trading this week at all. There's just nothing in the calendar that would make sense to trade live. And with that, we're going to be moving on to our charts, starting with oil. We can see that oil continues to very tightly follow that level of support, very close to the $58 level. And it's been there for a couple of weeks now. Retreating somewhat, but always ending up right back. So even oil has been sideways for the past 2 weeks. Moving on to currencies, euro dollar had a pretty nice retracement up into dollar weakness. And then Thursday into Friday, it went all the way back to where it had started the week. So it's ending pretty much the same level. Again, the very definition of sideways. But you'll notice that there was some very nice intra-week movement as it did try to go up and then simply failed on Friday. So no net change in the value of the euro dollar as we go into the end of the week there, but it did make quite a bit of a swing in the middle of the week. Pound dollar, pretty much the same thing, went down somewhat into dollar weakness at the very beginning of the week, not by much, and then simply collapsed. And the pound is probably one of the weaker looking currencies right now. It looks like it's poised, expecting bad news, and it's definitely not heading any higher. It's found its top well below the level of resistance above it at the 130.15. And Friday just saw a complete rout. And I think this is something we can look forward on Fridays, as people would be very nervous about going into the weekend owning the pound. So I would think that the next couple of weeks, we're going to see a sharp retracement down, no matter what happened during the week on the pound pairs, especially the pound dollar. And we may end up taking advantage of that and do some Friday trading. Again, this week is probably going to be a little bit off simply because of the holiday. But in general, I would expect the market to be unwilling to be holding the pound on a weekend. USD JPY, pretty flat, not much movement intra-week or by the end of the week either. It's just moving in a straight line, straight horizontal line, following a trend line, a very shallow trend line up, but not breaking the resistance level right above. USD Canadian, probably one of the sharper movements, and this was on the back of what seems to be a rather poor showing on the Canadian employment numbers at some point, which have continued percolating into the market. The good thing, I think, is that the CAD seems to have found a high, and we can see those tweezer tops on Wednesday, Thursday, and then a very sharp drop on Friday, which ended up retracing towards the end of the day, ending up right in the middle of those two longer candles. So still a bullish movement on the USD CAD, definitely a little bit of Canadian weakness, but it doesn't seem to be breaking above the prior level of resistance. And indeed, I think it's probably going to be a good opportunity to trade it all the way back down yet again. We've been out of the USD CAD since it did take us out at the first retrace all the way at the bottom. and we've been waiting for the next opportunity to trade it down. So we'll see if that happens this week, next week, or whenever, but I don't think it's going to have the strength to continue going up. Again, my opinion, but based on the chart, that's the way I'm reading it. USD Swiss, very sideways, but somewhat of a wide range. It's established a range that's about 100 pips wide. It ended the week at the very top of that range. So this is one of those pairs that did do a retracement and ended the week much higher. Well, I wouldn't say much, about 80 pips, maybe less than 100 pips higher than where it began the week. But still, it is in a bullish retracement, but at the same time, also finding some nice resistance right where it's at. So we're short on it. We're carrying a small loss right now and waiting for it to turn in our favor if it does, of course. Aussie dollar started the week fairly bullish, trying to head up, and midweek just collapsed. So Wednesday, Thursday, Friday, with the biggest drop being Wednesday, but ended up sort of in no man's land. It's right at the outside of the Ichimoku cloud, where it could find either resistance or support. Not too sure what it's going to find. Both the Aussie and the dollar are a little bit odd right now, where you don't know which way they're going. So might not be the best pair to trade. We are short on it right now, and we are at profit. So we have to trade whatever the charts give us, but this is one of the less clear charts on the docket. Kiwi dollar also finding some nice resistance there at the 64.25. Another one where we're waiting for it to drop and then try to attack that trend line. It just hasn't been willing to do so. But the good thing is that it is finding resistance, so it's a matter of waiting it out and seeing if it does turn in our favor. Aussie Canadian, we're already short on this one and also carrying profit. We got in on that bounce off the trend line, and it does have quite a nice amount of room to move towards the bottom. So I'm very hopeful on this trade, and of course, we'll have to continue monitoring, make sure it's heading in the right direction. But it is looking good for a short all the way to the bottommost level of, second bottommost level at the 89, almost exactly at the 89. Euro Swiss, we took profit on this one as it dropped last week, and then we got in again very near where it's at right now. So we're waiting for the next bounce towards the bottom with the stop loss above resistance. So it should be fairly safe and out of the way. And again, this is one of those where, since it is sideways, unless it breaks that pattern, it's a matter of time before it does turn again towards the bottom. Euro pound flat and very uninteresting. Obviously, this can change with the election or whatever outcome comes from the election, or even whatever happens right before the election. So this is one of those where we have pending orders in place to take us in if we do see a sharp movement. Euro JPY also flat, but starting to look like it has a bearish tendency. We're in this one as well already and showing a profit on that drop that it did on Friday. We'll have to see how the week begins and if that's going to continue or if it's going to start moving sideways again. So this is one I'm going to be watching quite eagerly to see if we can get some nice profit out of it. Euro Canadian also in this one, it bounced nicely off the trend line on Wednesday, and on Thursday. And Thursday, Friday had it make its biggest move down in quite a while. So again, still monitoring this very closely to see what it's doing, but it is looking like we got in at the right time and we're trading it in the right direction. Pound JPY, we have a long-term trade open per while now, so probably for the better part of a month. It's another one that made its biggest move down in quite a while. We are carrying some profit on that trade, but it's still at support. So we're waiting for it to break that level of support and start showing some strength into that downward movement, which may not come until we're closer to the election. So there's every chance that this one will start heading back up and continue moving sideways. But eventually, I think we'll see that break towards the bottom. The question is how much, how far it will move when it does. So The jury's still out on that one. We did enter this trade preemptively. Again, we're carrying profit, but that shouldn't make anyone feel too safe. This one could still go in either direction. Aussie JPY, we have I think we got taken in on the Aussie JPY trade on the latest bounce down when it broke the trend line on the intermediate. So we are short. I think we're pretty close to break even right now. And again, a trend line break is a pretty significant event, especially on the daily. So we'll see if this one has the strength to continue going or it is a fake out. But it has broken, tested, and then continued heading down. So far, it's looking good. Euro New Zealand, very sideways, broke support yet again and ended Friday below support. But of course, we need to see what the week brings us as it starts to see if we're having a breakout. If I do see a breakout towards the bottom, I'm going to trade it regardless of anything else. So today into tomorrow is going to tell us what we're going to do with the Euro New Zealand. Pound Canadian also broke down Thursday into Friday. We have a long-term trade on this one as well, which is showing a little bit of a loss. So we're not at the break-even point yet. That would be the next level of support. But it is at last turning in our direction. We'll have to see if it continues. The trend line has been broken, followed on the bottom, tested, and then, as I said, Thursday into Friday, it finally broke in our direction. And last but not least, the pound Swiss, again, almost perfectly flat, hasn't broken that trend line. And we're waiting for the next shoe to drop in the UK fundamental universe, I guess, ecosystem to see when we're going to be trading down. We do have pending orders to take us in short if we see that break, but it's been going on for more than a month, almost perfectly flat. That does cover it for our charts. A few of the setups in progress, and there's not much. All these comments should be taken more longer term than short term, and that's going to be the norm anyway in most cases, but I want to highlight it this time. We're in a sideways market. There's not going to be a whole lot of opportunity for much of anything until we break out of that sideways market. So that's the takeaway. Don't expect much until the market actually does a breakout. For the pound pairs, virtually zero movement as the UK enters the final weeks before its general election. So we already knew that. And that's probably going to be the case until we do get closer to the 12th. We're still in November, so we're not even in the right month for the UK election. The dollar pairs, the dollar is looking more bedraggled. We have all these impeachment things going on with President Trump. We've got the trade wars with China. So there's a lot of negatives beating on the dollar, but it still hasn't really broken into weakness. It's just gone sideways. So obviously it's waiting for something, either definitive bad news or something to counteract, and the market is just poised, ready to go in either direction. It's very dangerous to trade under those scenarios, other than, trying to pick 25 to 50 pips at any given time on a quick movement, which again is not the best trading environment, but we'll continue watching and see what it gives us. The Canadian continues more strong than not, but it is doing retraces. It's going back up to resistance, and it's still in the doldrums as the market has gone decidedly sideways. So no huge news there or change in anything, simply pointing that out. The Swiss, same thing. It's looking like it's waiting for something. So it has gone sideways, and it's just bouncing up and down, waiting for something to break it out of that pattern. And the euro, probably the one pair that's more negative than anything else. Definitely a bearish bias on most of the euro pairs. It doesn't seem to have much upside. I think the market's taking a look, and there's nothing positive that could possibly come out of the euro. The only thing, the one bright light is that something not too negative doesn't come out. So it's gone sideways, but definitely slanting downward into weakness, just very, very slowly. And that concludes my analysis for the start of the week. Parting words here, your time in the market. And I think of things throughout the week, or somebody starts a conversation with me, and I take that as my lesson. But somebody was asking me how much time I spend doing this. Some people have asked if they can shadow me for a week as I do my trading. You're going to be very bored if you shadow me for a week, because actual trading or actual paying attention to the market is maybe an hour, sometimes an hour and a half a day. That's all the time I spend doing anything with the market. The rest of the time I'm doing other stuff. So if you're shadowing me, trying to see what I do with the market, you're going to see me active for about an hour a day, and that's it. The rest of the time I'm doing other stuff. And that hour and a half a day includes research, charting, trading, and managing my open trades. It even includes this session and any other session I have during the week. That is part of my hour and a half. And sideways markets, of course, are always going to be tough on new traders, because when people get into trading, they want to be doing something. They think that if they're not doing something, they're really not traders, or they're not taking advantage of it. I try to do the least possible, as I said, an hour and a half a day. But people always, especially at the beginning, think they should be doing more, as if the low volatility in a sideways market was something they could correct. You can't. When the market's sideways, it's sideways, period. And then when the markets do start trending, they think they should be spending more time taking advantage of that. Same thing applies. You're going to be setting up your trades, and the trend is what's going to take you along. It's not based on how much time you put into trading. Remember, making money in the market isn't based on the time you spend working. It's based on your money working. Your money is going to be working 24 hours a day, 5 days a week in the market, not you. You don't need to dedicate that kind of time to it. So don't make trading a job. Make it your money's job. Let your money do the trading and make the profits. You're only there as guidance. You're telling your money where to go. Everything else is not going to be based on the time you spend. It's going to be based on whatever the market's doing. And that's going to be it for me for the week. Any comments or questions from anyone? Or rather, not for the week, but for the start of the week. Comments or questions? Okay, thank you very much. I will be sending a recording of this out very shortly, and I will catch you guys tomorrow during our evening session. Have a good one.